The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the February 19th wonderful Wednesday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool I call Accentuate the Positive, Eliminate the Negative. You know, folks, you gotta accentuate the positive. You gotta eliminate the negative. Latch onto the affirmative and don't mess with Mr. In-Between. And so sang Johnny Mercer in the mid-40s. And, of course, my favorite version by Al Jarreau. That's the one that's playing in the background right now. Now, I think it's a great message for each of us. Reason being is that at times we tend to blame others for our misfortunes. Now, I don't know if you've ever done this, but I most certainly have from time to time. And you know what? It's a toxic waste dump. The lesson I've learned is that instead of wasting time and energy on anger and accusation, it's far more productive, at least it is for me, to focus on solutions. You know, move away from the problem. That means accentuate the positive and eliminate the negative. So, if you ever fall prey to this, just play this tune in your head, and it just might help you trigger a change of state. That's what you need to do. You've got to change the state of mind, because if you believe that anger feeds anger, well, it's really important then to eliminate the negative. Now, I'm not a big believer that if you only think positive thoughts, that only positive things will happen to you, since that's crazy. In fact, all you have to do is to have walked in my shoes to know how false that statement is. But what I do believe is that you and I, is that we control our mind, we control our emotions, and when we control our mind and our emotions, guess what? We control our life. And that is a fact. I believe this with all my heart. You know, Ralph Waldo Emerson, he once said, you might want to write this down and then think about it. He once said, the ancestor to every action is a thought. So that means thought comes first, positive or negative, and next is going to come action. You know, folks, the impossible is possible. Just get rid of the only thing that gets in the way. And in the word impossible, it's very simple. It's I am. That's right. The word impossible, if broken out phonetically, really says I am possible. So I say, thank you, Johnny Mercer. Accentuate the positive and always eliminate the negative. Well, actually, let's go check out the negative in the market. Right now, we've got the Dow futures off 38 points. They're trading out at 16,068. S&P off about 5.25 points. They're trading out at 1832. NASDAQ off 5.5 points, trading out at 36.69 and a bit of change. King dollar on the move this morning, up about 7 ticks, trading out at $80.11-12 or so. Goldilocks back about $5 right now, trading at $19.70. Silver off 9 pennies, trading out at $21.80. Light sweet crude, that's up 35 cents, trading out at $102.78. Natural gas, oh my goodness, that's trading up 6% this morning, 5%, up 28 cents out at $5.83. Let's take a quick peek around the globe out here. Let's see what we've got going on over in Europe this morning. Both the DAX and the FTSE trading off about 20 points each or so, about 0.2 to 0.3 to the downside. In Asia last night, we had the Nikkei close off 76 points. The Hang Seng making up those 76 points to the upside. And the Shanghai up a little over 1%, up 24 points. Our call-in number is 877-927-6648. If you give us a call, would be happy to take a look at your stock chart. So where do we begin the day? Let's go begin the day taking a look at the metals market. Let's take a look at Goldilocks and silver out here. So gold, what do we know about gold? Number one, We know that gold is in the overbought condition. If we use and I like to use the 14-period relative strength indicator, just really helps us to understand, oversold, overbought conditions out here. And we know that the most bullish thing that any kind of overbought condition can do is just simply travel sideways. It's no different than eating too much for dinner one night. You got to, maybe sit on the sofa, watch a good hockey game, maybe do it in the afternoon or what have you. You got to do something to just kind of, well, you could always go work it off, do a little bit of exercise, but nonetheless, it needs to be worked off. And that's what we have going on here. So you've got gold in a overbought condition running into the 200-period smack dab into the 200-period exponential moving average, making a 0.618 retracement, making a 1 to 1.272 A to B equals C to up. All of those things are a formula for just simply a market that just needs to maybe just kind of guide sideways here and work off that condition, maybe even pull back. This is not shortable. Do not short. We have now had the metals break out. Well, in the case of silver, we'll go take a look at it. But the metals have or are breaking out of their long-term descending price channels and trends and so forth. And so you really want to be in cash when it comes to your metals positions, or if you're long, just simply, monitor your stops or what have you. Don't let anything get out of control out here. But really what you want to be doing if you're not in this market is you want to be looking for places in order to be able to get in. Where is it that Goldilocks could pull back to? Well, it'd probably be a gift at this stage to pull back to 1274. That would be nothing more than the 0.382 dead cat bounce out there. Of course, 1239 would be a huge gift. Don't know that we will see that. We'll take things one day at a time, one moment at a time. So we've got a number of patterns that have all converged, and they all suggest that we ought to see some type of retracement. We ought to see some type of move sideways out there. So that should be the expectation. That doesn't mean that it can't bust through and that it can't move higher and that it can't get more overbought, because it most certainly can do those things. But there's enough patterns out here to suggest that we ought to see a little bit of a pullback. Same thing when we take a look at high-ho silver out here. Silver running smack dab into the 200-day exponential moving average, moving right into the upper portion of the descending price channel. That's a price channel. That's the red line on my screen. That's been in place since the highs back here in 2011, so that's a very strong price channel. So price running into it. You can see also on the bottom of my screen if you are watching us on Tiger TV, or, thanks for doing that. If you're listening on the radio or your mobile device at tfnn.mobi, what I can tell you is yesterday, as the price made it up to the 2198-ish level, we had the 14-period RSI get up into that 76 area. It can still expand further, but it is into the overbought condition. So this too should work its way off. Of course, running into that long-term descending price channel support is significant. Boy, once it gets up over that, comes back and tests it, it will be off to the races here. We'll see if silver can come back. Ideally, the ideal trade, the ideal setup here, and people would then all of a sudden begin to write the move in metals off to who knows what. The ideal thing would be to see silver come back to about the 2150-ish, 2050-ish type level out there. Not 2150, 2050 out there, because that is the consolidation that it broke out of, that had been traveling in for about 3 months time period. Look, $20.82, a pullback there, the dead cat bounce, that would probably be a place to start taking a look at positions, whether it's the metal itself or whether it's some of the miners out there. That would probably be a spot to be poking around perhaps, even better than peeking around. Let's go take a look at the euro Japanese yen. Didn't really discuss it at all yesterday. Now, the euro Japanese yen, and this is going to be important for us to be paying attention to because, number one, it did break a trend line. So if we take a look at the trend line out here, and the trend line I'm using on the daily chart, that is the candle session from December 27th. That high, 145.67. The next touch point that I'm using for the trend out here, January 23rd's high, 142.40. And you can see that that level was broken a couple trading sessions ago. That was on Monday, on February 17th. Yesterday you had some follow-through. Now, so long as this low here from December 12th, that December 12th low is 1.38664, what's likely to set up here is an actual move higher inside the euro Japanese yen. The target that I would have would be right around the 143.67 type level. That would be your 0.786 retracement area. So it's somewhere in that area. That would also be your A to B equals C to F. Let's take a look and see. I don't recall if that's just the 1-to-1. Let me see if that's just the 1-to-1. No, that's about the 1-to-1.272, which is really where I would be targeting it. So the 1-to-1, by the way, 142.74. But I suspect unless we were to see some significant failure here, that we would see a move up to at least a 142.74, but more likely 143.84 level out there. Now, that would bode well for the bulls, because here's where the real fuel in the fire comes from. It comes from this currency pair out here. And so long as it doesn't take out this low, that low from December 12th out there, we should see a strong move inside of this market. Of course, all we need to really do is let's go see what's been going on in this currency pair on an intraday basis, and that means we go take a look at the 120-minute chart. And on the 120-minute chart, we can see this nice rising price channel. Those are the black diagonal lines on my screen. And this morning, as price pulled back right into the bottom of that. Accentuate the positive, folks. Eliminate the negative. And get rid of that Mr. In Between. We'll be right back, folks.
Up to the maximum.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Right now, the Dow futures off 43 points. The S&P futures off 6. It looks like the Russian hockey team is going to maybe be knocked off of their game. An important another about 12 minutes or so, a little bit less than 12 minutes left in the game, and the Finns are beating the Russians 3-1. So nice to have 2 goals in their pocket at this point in time. So we'll see how that plays out. I believe that they're now down to single game elimination here. So this is important for the home team on their home ice. In any event, you didn't want to talk about that. You wanted to look at the Euro-Japanese yen. We were going to the breakout there. I know we're taking a look at the futures. You know, they were trading lower. What's going on inside the Euro-Japanese yen? Because that's the carry trade out there, and it's important to be paying attention to what's going on inside that currency market. And so, if we take a look at the rising price channel, that's what I've got drawn on my screen out here. I see the bottom of the black line. Price came down there, formed a little bullish engulfing candle during the 120-minute session here. Now, on this 120-minute chart, that closed at 9 o'clock this morning. And, excuse me. And so price came right down to the bottom of that, rejected that area. If, in fact, that level holds, which is right around the 139.98 area here, you know, we probably see our markets move higher out there. If this area breaks, then it starts to become somewhat problematic out here, because if this area breaks, you know, what we had take place inside this currency pair on the 120-minute chart, it formed this nice little 0.786 Gartley sell pattern. Now, what I know is that when those patterns fail, they typically turn into butterflies. And that's exactly what the bulls want to see take place out here. And this is a pattern that actually worked, because this formed right out here at the trading session of about 7 o'clock in the morning on February 11th. Now, what it did do, and you can see this, I know there's a lot of lines on my screen here, but if you actually come from the swing point low, 3 o'clock in the morning, that's on February the 4th out there. That's at a low of 136.22. And you make the run all the way up to that little shooting star that took place at 9 o'clock in the morning on February 11th. That's where it also set up the 0.786 Gartley sell. If you go from the low to the high, you use your retracement ruler, and you put on your retracement ruler 0.382, 0.618, 0.786. You know there's 5 outcomes for any Gartley buy or sell pattern. The first outcome, the easy outcome, is just making that 0.382 retracement level. And that's what took place inside of the Euro-Japanese yen. Now, it made it with a big, wide-ranging bar. It did that at 7 o'clock in the morning on February the 12th out there. Ordinarily, now, markets don't end on wide-ranging bar, and this market didn't end on a wide-ranging bar, and what I mean there is you don't typically see an immediate turnaround, and we didn't. We saw a bounce off of that level. We saw just kind of a move sideways or what have you. We saw price try to get back up there and test it, really back around the 9 o'clock in the evening on February 13th, but boy, when it came back up and it tested that area at 11 o'clock in the evening, and this is on February 17th when our markets were closed, when the U.S. markets, the cash markets were closed, but not the currency markets, not the futures markets out here. Boy, it was coming back up into that level with a wide-ranging bar. And that, just like we had the wide-ranging bar to the downside, that was spelling trouble out here. And in fact, we saw price close above that. When you see price close above a failed Gartley sell pattern, that says, especially one that has worked. So when I say failed, I don't mean, hey, it got to the 0.786 and it kept running. I mean a pattern that worked. In this case here it did. It made its first move, that 0.382 retracement, and then since has failed. That is extreme. Well, that says that that's going to turn into or could turn into a butterfly pattern. The first move would be the move of the move, the 100% move of a move, getting back to the swing point out here. Now, in the meantime, you can see the yellow chart on my screen. what you can see out here is that at the same time the price was pushing up with that wide-ranging bar at 11 o'clock, well, at 1 o'clock in the morning, it had also moved a bit higher and it formed a small butterfly cell pattern. Beautiful Fibonacci expansion numbers. You got a 1.272 expansion of your X to A point. You've got a nice of your B to C point. You've got a 1.618 expansion. And so far, that pattern is actually held. We're going to see if we see a close above. Let's use the swing point high from 11 o'clock in the morning yesterday, 141.02. That will be extremely bullish, in my opinion. That'll be extremely bullish for the market out here in its ability to go ahead and push higher. So that is on the Euro-Japanese yen. That was taking a look at the daily and then stepping down one level, which I consider going from the daily chart, go and take a look at that 120-minute time frame out there. So that's what's going on inside of that currency pair. We took a look at gold. We took a look at silver. Hey, after the market opens, let's go look at this. Let's go take a look at natural gas. It's on its way to a new planetary constellation out there, probably about $6.34. 877-927-6648. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com. Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds. Plus, you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow trading up 25 points out at 16,104. S&P off 3.5 at 1837. Composite down 7, trading out at 42.65. Russell 2000 off 2 points, trading at 11.59. Apple down $1.77. Google off $5 and change. Leading the charge, the upside. CF Industry Holdings. CF is a ticker symbol, up a nice 5.6% this morning, up about $13 and change out here. Let me see what's behind the move in CF Holdings. Nothing that I see. Well, wait a minute. Wait. Let's say, wait a minute here. Do I see something? Were they out with numbers? Looks like they had Q4 earnings per share of about $5.71 versus $7.40, but they're being handsomely rewarded. Their net sales $1.3 billion versus $1.48. They must really be guiding well out here because they're trading up about $11 as we speak right now. Signet Jewelers, that's up by $10. I believe that they are in a deal with Zales out there. So Signet Jewelers, Zale announced definitive agreement for Signet to acquire Zales, and Signet's up a nice 12.5%, about $10 this morning. Lumber Liquidators, Double L out here. It is trading up about $6.60 as we speak, up about 7%. Out with numbers as well. Their net income, $20.8 million versus $13, so that's a nice jump in net income. Revenues, net sales appear to be up about 22% as well to $258 million, so they are doing well. Zebra Technologies, ZBRA is the ticker symbol. They're up 11% here this morning. I do not see any news behind that. Panera Bread, PNRA. Now, I believe yesterday they were trading to the downside here in the aftermarket after they came out with numbers. They had Q4 net income about $54 million versus $52. Their revenues did rise. They were up about 16% to $661 million versus $571 from the prior year. Consensus on that, I believe, 662. They are trading up this morning, up about 3% out here. You've got Garmin, GRMN. That's up a nice 10% this morning, up $4.70 out here. They posted revenues of $759 million versus $768, so missing the top line number. Let me see here. Net income, $163 million versus $129, so they were able to grow their net income quite healthily on less revenue out there. I like their accountants. They did a good job. Now, to the downside here, you've got SM Energy taking a lot of energy out of its holdings this morning, down 17%, most likely with volume. We'll take a look at that here. SM Energy, they generated revenues of $636 million versus $444 out there. And they are getting hammered to the downside, so they really beat the top line. You see what they did on a bottom line basis: $7 million in profit versus a loss of $67. I don't know what's behind the move lower. Must be some poor guidance out there, but they are leading the charge to the downside. You've got Google just behind them, well, quite a ways behind them, 10 lengths behind them. In fact, you've got SM Energy trading off $14 and Google down $4. You got Cimarex Energy, that's trading down 2.5%, about $3. XEC is its ticker symbol. You got Tenaris, TS, that's trading down about 6%, $2.70. You got Apple throwing its hat in the ring there, down about $1.70. Omnicare, OCR is a ticker symbol. They're off about $3 right now. Tesla Motors down about 3. Terex Corp off about 220. The Dow now down about 12 points. S&P off 2 out here. Now, I mentioned before we went into the breakout there, let's take a look at natural gas because it is on the rise again. Now, what we are looking at on my screen here is a continuous contract for natural gas, and it is a monthly chart because continuing to look at the daily chart, the question is, hey, what's it doing? Where's it going? Is there any resistance anywhere in this move higher out here? And that's why I put up the monthly chart for natural gas, just to give us some perspective. Remember, when you're trading, you always want to be paying attention to the charts above and below you. Well, if we take a look at the monthly chart for the continuous contract of natural gas, you'll see big, you talk about some volatility. This is a monthly chart we're looking at, but take a look at the month of July 2008. You saw in that month natural gas go from a high of $13.69 down to a low of $8.80. Folks, that's more than the entire move we've seen off of the bottom here just yet. So can this be volatile? Oh, yes, it can be more than just volatile out here. Now, what it's done from that high to the low that came in here in the 2012 time frame, April of 2012 to be specific, down at $1.90. So it goes from $13.69 at that high down to $1.90. And what we've seen here is it's on its way to making that dead cat bounce, that 0.382 retracement, which would take it to a level of about $6.49 out here. Right now you're traded at $5.92. Now what we've also seen is the B point of an A to B equals CD up. The B point is April of 2013, 3.7 million contracts. That was taken out with 3.7 million contracts. And then, of course, this month, we've seen a volume of, about 2 million contracts or so. So you've got a confirmed A to B equals CD on the way up on the monthly chart out here. And what it really says, you can see that it sliced through the 1-to-1 A to B equals CD on the way up. That was a given based on the shallow retracement that it had created when it formed the C point out here during the month of August in 2013. So is $6.34, $6.49 the place where we will see natural gas stop? I don't know. But what we do know is we do have the last swing point that was formed out here, and that was during the month of January in 2010, that high, $6.10. So that's a natural area of resistance. It has not been tested, so I don't know if it's a strong area of resistance. It is a swing point. It's a logical area for price to move sideways or pull back. If it takes out that area, here's what we can say about natural gas. It doesn't, from a swing point standpoint, it doesn't have anything standing in its way moving up to $13.69. Am I saying that's where it's going? Absolutely not. But when we take a look at natural areas of resistance out here, if it can clear that swing point on a monthly basis, there are no other swing points on the monthly chart for it to stop it from moving up to at least the $9 range out here. But we do see you're running into the 0.382 retracement. It hasn't really taken a rest here for several months, so that would be logical for it to do that. Let some folks off of the elevator. It's making a 100% move by getting back into the January 31st, 2010 swing point out there. So it looks like maybe at some point in time here in the near future, we're going to see a little bit of a rest out here inside of natural gas. But that's what it's doing on the longer-term chart. And you want to pay attention to the longer-term chart. I know there's folks out there that are chomping at the bit to play this to the short side. I just don't see it in the cards out here to be doing that. That would be like trying to go short gold and silver out here, and you better be quick on the trigger if you're going to do that. Now, let's go take a look at, speaking of natural gas, and let's stay in the gas sector. Let's go take a look at light sweet crude. Let's go see what it is doing here. Yesterday, taking out a swing point, doing it with volume, 229,000 contracts, taking out the swing point from December 27th. That only had 65,000 contracts. The almost getting up to the 0.618 retracement area, that 104. That's the target area. We can see that light sweet crude has also gotten into on the daily chart. That's what we're looking at here right now. It's a continuous contract that we happen to be looking at. It's moved into the overbought condition out here. So expect the this area, or 104, to be an area, a resting spot to just try to work that condition off. But you've got let me put this on let me see if I've got a weekly chart out here. If we don't, we can always just go ahead and create one and form one out here. Give me a moment. Yeah, here we go. We've got the weekly chart here. This continuous contract here. Now, what we can see is that light sweet crude had been in a descending price channel. And this is a descending price channel going back to the highs of $145 back in July of 2008 out there. So that's where we're starting from with regard to either our trend line or our price channel line. Now, what light sweet crude did was it broke through that descending price channel. It broke through there with conviction in July of 2013. Goes ahead, makes an A to B equals C to up pattern. If you want to see what that looks like, we're coming off the swing point of June 29th. We're going to take it all the way up to the high out here. June 29th, by the way, that was in, well, let me start over there so I can tell you. The June 29th, June 30th, how can I come up with June 29th? The June 30th low of 77.28. That means this chart here is showing some data that I don't necessarily want it to. But that's the low we're going to use as our B point out here. We're going to use the high at September 14th. That's not a week. Yeah, September 14th, 2012. That's at 100.42. And our C point all the way down here back in November of 2012. You can see it made the 1-to-1, a little bit over the 1-to-1, close to 1 to 1.272. A to B equals CD to the upside out here. And then it went ahead and pulled back, and it pulled back almost to test the descending price channel out here. Now, what is light sweet crude doing on a weekly basis? Well, if we take, again, a look at those retracement levels out here, that's coming off this most recent swing point high back in August 2013, down to the low that was put in January of 2014. You'll see that 0.618 retracement level that it's trying to get to. That's that 104.22 range out here. So it's broken. You know, you can take a look at light sweet crude. It has broken its descending price channel, long-term descending price channel out here. Now you could be seeing light sweet crude actually form A to B equals CD pattern. That would look like this. Let me get rid of a couple of the lines on the screen, not all of them. You would use here now your A point would be the low that came in on the trading session of April 30th, 2013. That low is at 85.61, so that would be our A point. Our B point out here is on August 31st, 2013, out at 112.24. And your C point, right this moment here, happens to be the low on January 10th, 2014. A 1-to-1, A to B equals CD. That's a pattern that it is making to the upside, 117.84 out there. And you can see that price here moving along the strong side of that C to D leg. So that is on the continuous contract here for light sweet crude. Let's go take a look at bonds, see what bonds have done. Looks like Russia's been knocked out of the tournament by the Finns out there. I believe that is the one-game elimination, if I am not mistaken. I know everybody wanted to know that. You think all we do is follow the markets around here. Not so fast. If we take a look at the 30-year Treasury, it's trading out at 133.2 out here. It's probably, it's trying to get back into this little rising price channel here to suggest that the break to the downside was a false break. That took place back here on the trading session of February 12th. It's just poking its head in here in that rising price channel. If it can get in there, it says another test of that consolidation low in the 135.03 area out here. And that would be for the 30-year Treasury. Now, let's go take a look at the currency pairs. Markets are relatively flat. Dow is off. Dow's up 12 points. S&P is off a point. Russell's off a point. Nasdaq's down 7 points out here. So at the moment, a relatively quiet market, much like yesterday from a volume standpoint, from a price movement standpoint out here. So let's go take a look at the currency pairs. Let's go see what we can find out here in Euro land. Let's go take a look at the Queen, see what it is doing now. In the case of the Queen out here, this is the weekly chart that no, it's a daily chart. I take that back. The daily chart here for the Euro-US dollar. And what it has done, that red diagonal line on my screen, going from upper left to lower right out here, that's your price channel line. And what we can see here is that price actually has broken through that area. Now, the last time that it broke through here happened to be on the day of December 30th, 2013 out here. It broke through it. It came back into the price channel, 2 trading sessions lower, and made its way down to the bottom of that rising price channel. Now, we're seeing a little bit of a break above that. It does have some resistance overhead. and this is going to be important as we go take a look at the weekly chart next. So it's likely to occur here inside of the euro-US dollar. Looks to me like it wants to move higher, come up and test the resistance area, the resistance line, right around 138.10. But let's face it, if it can do that, why wouldn't it go ahead and try to break the trend line out here? And that's the black diagonal line on my screen. So I would have to say that what we would likely see is the queen try to make it up into about the 138, 35-ish type level out here. And then that may be the resistance point that goes ahead and shoots it further south. Now, if we put up the weekly chart on my screen, and we're going to take a look at that here momentarily. What we're going to also see is we're going to see price that is above this level. It's been above this area, this descending price channel on a number of occasions here, and each time by the end of the trading on Friday, price gets back in. But we are down to a very narrow cone out here. Now, the euro-US dollar on a weekly basis, you see some of these yellow boxes on my screen out here. What's interesting about the euro-US dollar is it has a certain characteristic about it. And that characteristic is this. Each year, beginning in around the late December to early February time frame, it forms a significant top or bottom. It did it back here. In fact, it's done it. I took this back to, how far did I go back? 2004, 2003, 2002, 2001, I see, 2000. Geez, I took this thing all the way back. I took this thing back pretty far, didn't I? I took this back all the way to, when is this, 1995. Okay, so I took this little pattern out here. It's been going on, well, at least since 1995. I took it back to 1995. So I think I've got enough samples with regard. And the boxes that you're looking at on my screen, these yellow boxes, those are the time frames right around that end of December, early February time frame, where the euro-US dollar makes a significant top or bottom out here. Something to think about. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's up about 30 points right now. S&P flat, composite down 11, so the composite is struggling out here. Russell 2000 off about 2 points, and really back to the message of the markets with regard to the euro-U.S. dollar currency pair. Now, what we've got here, you got the competing pattern. As I mentioned, in years past, there's typically been a significant higher low form that sometimes lasts for quite some time out here inside of this currency pair. Now, the problem here is that, and it's actually not so much a problem, it's really an opportunity, it's really a beauty, is because we made a high, or the euro made a high, the week of December 27th, 2013, as our markets were also making a high out here. And so the question is that the high? Or is that going to be, is the low what we saw here a couple of weeks ago, really last the week of February 7th out here? Now, what's really great about that and knowing about this other pattern of significant highs or lows that lasts typically for quite some time inside this currency pair is that we're up against this descending price channel. We're up against this trend line out here. And that means a real breakout of this area. We should see a fairly significant low in the marketplace. Likewise, if it can't hold this, it says that what we should see is we probably should see a move down into about the 128-ish type level out here inside of the euro-U.S. dollar. And I'm just simply going to the most significant area of swing points that have held as support. And those were swing points going back to March in 2013 and May of 2013 and then again in July of 2013. So we're very close to, over the course of the next week or so, probably being able to determine what that move might look like out there. So let's go take a look here at, I didn't get a chance, my fault out there, taking a look at any stocks really popping and dropping out there. So and we'll save the NASDAQ for the next show. Let's take a look at something that is really moving to the downside here this morning, and that is to lead the charge. You've got SM Energy. SM is the ticker symbol out here. And that is down with volume out here, down with big volume. So taking out a swing point, confirming an A to B equals CD down to a minimum. The swing point that is taken out is back on December 19th. That low was 78.41. You took it out this morning, 2.8 million shares. So there's your A to B equals CD is going to look like this. It's already completed the 1-to-1. It's going to do much more damage than that because of the way it's come off of the C point. Where this is likely headed to, man, oh man. So you've got an untested high volume low inside this thing. That would be pretty amazing, wouldn't it? For it to get all the way back to that high volume low, which is on August 2nd, 2012 out here, and that price level is around $39.44, high of $43.85 out there. That would be big. Let me see if there's anything else that might stop this from falling out here, or at least its next level. It's with the volume today already where it's at. It says that's where this thing is headed to. That is SM Energy. I don't know what they did so bad out here, but man, they are not. That's the message of SM Energy as we speak here at the moment. Let's take a quick peek here. You've got Netflix trading down about $7. Let's go see if there's anything behind that move. NFLX is the ticker symbol. Let's see what we've got going on in Netflix. No big deal out here. Trading out at 430.23, so we won't even spend any time on Netflix out there. If we take a look at today's action here so far, let's take a look at the New York Stock Exchange right now. That is flat. It is up 86 cents. We've got net declining issues about 63 right now, so really not that big of a deal. Folks, it is Wonderful Wednesday. Thanks so much for starting your morning with us out here at TFNN. Stay tuned. The Money Masters show is up next if you're off to start your day. Have a great day. Hey, don't forget, get over to the homepage at TFNN.com. I've got a special report out there. It's free. It's called Major Market Tops and Bottoms. It's a report you want to download and put in your archives. Have a great Wednesday, folks. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.